Hey traders, welcome back. Have no fear, Richard, the self-proclaimed Elliott Wave Jedi, is here with another Elliott Wave dose. So just before we get started, let's say if you guys want those daily updates, those I just posted them for the EU indices, US indices, metals, energy, and the FX majors, right? So let's just jump before we go on the charts. Let's just jump on the economic calendar because today is the most important day of the week. We have a full plate right here. Let's say we have the GDP for the pound. We do have for the CAD the BOC rate statement as well. And following that, we do have the Fed Chair Powell testifying. And because of all these news, and of course because of this main event for the Fed's speech and all this, and also the Fed meeting minutes later on, right? We would see some massive volatility on the actual charts. So, without further ado, let's just jump on the DXY, on the dollar index right here on the 2-hour time frame. Now, obviously, you guys know previously that I've been actually bearish on this, even from there, but even from the actual tops. So. This actually had me going a little bit because I was expecting this to bump its head in this trend line, previously broken trend line right there, and then obviously reverse. Okay, so last Friday on the NFP, on the non-farm payrolls, even so, I mean, we did have extraordinary figures for jobs added in the government sector, but the average hourly earnings and the unemployment rate were disappointing, right? So this came as an actual surprise, this actual rise, right? But I'm getting the sense that the pattern, I mean, the directions have not changed, okay? But they've just been delays. Okay, so the main pattern is getting delayed and the structure is being modified right here. Okay, so instead of having 1 2 1 2 and then we would have the free, that did not happen, right? Instead, what we have is basically an extended correction right here, okay, for this minor degree to red, which actually takes place as a W, X, and then an AB, 1, 2, 3, 4, and the extension in the fifth leg, which is actually showing an ending diagonal at decisive key Fibonacci levels. Okay, so we also have harmonics backing this view up. Okay, even though we have this trend line, it was supposed to react on that, okay, as I said before, but this could be a false positive, a false breakout, okay, for the dollar on the upside, okay, because we do have a bearish divergence, the pattern is ending, we do have 5 waves on the upside, no matter how you count this, okay, and this should actually drop. Okay, if it breaches this and it drops directly, it should be a continuation pattern. So even if this is a leading diagonal in an A or 1, okay, but let's just pretend it's an A and this is actually a B, still a C leg would unfold. Okay, it's only if this goes on the upside, does the overshoot for the ending diagonal on the upper trend line right there, okay, and then we have a corrective pattern right here, something that would look like this or like this, okay. Under no circumstance should it be a triangular pattern or something like that, but if it's a corrective, that will actually look like let's say some sort of a bull flag, okay, then I will change my view for the dollar and I will be looking for the upside for continuation because something might change. And correction, I mean basically the larger degree structure for the upside for the DXY might not finish, okay, might not have finished, but we basically trade what we have in front of us. So I'm gonna leave you with this. I don't think the upside is in the menu right now, I'm still looking on the downside. Okay, so if we do have a drop, an impulsive drop, okay, something like this, okay, to start, then the view on the downside will gain much, much effect, especially if we have a correction like this, like a bear flag right there to show us continuation for the downside. Okay, so as of now, I am bearish because we do have a bearish divergence. We do have Fibonacci extensions, retracements lining up for this ending diagonal, and things are looking basically bearish for the DXY, the euro dollar on the 2-hour time frame. Now, of course, previously I've been labeling this as an extension, right? 1 2 1 2 and then 3, basically leading diagonal in 1, then 2, then 1 2 3. I was expecting a reaction at the 61.8. We did not have that, okay? But I was aware as soon as I seen this triangular pattern, which is basically a running contracting triangle in a wave 4. As soon as I've seen this possibility and I've noticed the validation of the triangle, I let my members know that there's more downside for the euro, okay? And basically, what we have right here is an ending diagonal in the 5th leg, similar to the dollar index, okay, just inverted. So the pattern, in my personal opinion, has not changed for the euro. The upside should actually commence. Also for the metals as well. We're going to go on the metals, and I'm going to share with you my my personal opinions, of course, and for the indices as well. So stick with me here. Now for the euro, what I'm actually seeing is the following thing. The pattern has been prolonged. Okay, so in a sense that this is still a first wave of a minor degree, just that the second wave is actually here, and the way it unfolded was in a W, X, and then A, B, and a 5-wave sequence right here, basically finalizing with an ending diagonal. And there's something interesting right now happening for the euro dollar, right? Seems like it's breaking out and it wants to go. So doesn't necessarily need to complete this last move on the downside, okay? Hence the reason why I've been posting these entry orders, etc., okay, for the members. Now, the point is that we do have a bullish divergence right here, as you can actually see. So while the trend is actually creating new lows, the bearish volumes are rising, okay? The red volumes are rising, and pretty soon we'll actually have a vertical line right here, which would actually signal on this indicator that a new wave could be starting for the upside. So my 2 cents on the Fed Chair Powell's speech is basically for a dovish outcome for the US dollar. So basically all the FX majors, all the counter currencies against the US dollar should react and commence those trends, basically continue the pattern for the upside. So for the Euro USD, this means that this correction is finalizing right here, and it's going. Now, as long as this move, this does not travel lower than this start, it could still be a 1 2 1 2 3. Okay, so the extension could still be in play. It's only if it decides to deliver that last drop, creates a new low, then the 1 2 1 2 sequence is invalidated. It's not invalidated yet. As you can actually see, it wants to go. So the confirmation will obviously come from an impulsive move on the upside, and then on an intraday basis, a correction something like this with a free wave move, and then basically to pave the way for the rally, which I'm actually expecting. So basically what happened here with the euro, as I said, I was not expecting this to breach the 61.8, okay? So while it's actually dropped and breached through the support right there, then I was actually eyeballing the 78.6. At the 78.6 around there, we consolidated. So again, I've posted in my daily updates that there's more downside for the euro. Okay, so what did we do here? Well, I won this round. I won this round as well. This round, I may lose it because I can be stopped out, but this one, I'm actually expecting it to, I'm actually expecting to win it. Okay, so this basically concludes the final battle. Let's say I might just win the battle for this euro dollar pair. Okay, so we spend a lot of time on the euro, but it's worth it because this could actually go in a rally, and I'm still bullish on the euro USD because of this bullish divergence at the termination of this running or expanding flat. And it's just simply, you know, this leading diagonal right here from an Elliott wave perspective cannot really be the single leg. Okay, has to have another move on the upside. So I would actually expect something as at least 1.15, but if it's a rally, it's a proper rally, then we can actually see serious strength for the euro against the dollar. Okay, now jumping on the pound dollar, because still we have the GDP coming up, right, in about half an hour, something like that. So it actually looks ready to complete this X wave, okay, in an ABC pattern. So we have basically an AB and the extension, right here. So the last fifth leg is showing us a 5-wave sequence right here. All it has to do is just dip one more time and it's ready to go. Okay, similar to the euro dollar, although the structure is a bit more complex. So we have an AB right here in this ABC in this W, okay, intermediate degree, this pink W right there, and the interruption X wave, and this should pave the way for a free wave sequence right there for the Y. So I'm seeing bullishness in the pound dollar, and the euro GBP might just be ready to start that bearish trend. Okay, if you want to see that view, just go on the website under signals and orders. That's my latest signal for the euro pound. Now moving towards the USD yen. Okay, cannot stop noticing this corrective pattern. So the dollar yen is also finalizing a correction in a W, X, and then A, B, and a C wave in an ending diagonal. So if you're asking me, then look, let's say for instance from the fibs right here, WX, we do have it approaching the 261.8 extension, Fibonacci extension, and from the ABC, okay, if you're gonna use AB equals CD harmonics or something like that, okay, even if you're gonna use normal harmonics such as animals, let's say, you'll arrive at a point where this would be seen as an expanding flat, as a structure. Okay, so the verdict for the dollar yen is basically for more downside, and this leg could be quite serious because I'm seeing some volatility coming up and investors might just retreat towards the yen. Basically this is because of indices and global markets, right? So let's say now moving on towards the USD Swiss, similar to the dollar yen, okay, but the structure is basically being prolonged right here, but still it's a corrective, okay, no matter how you look at it, because it's let's say the way I'm labeling it is basically in a W X and then slight extension, let's say an A, B with a triangle right there, and an ending diagonal in the C wave. So this is pretty bearish if you ask me. Bearish divergence as well right there at the 78.6, which is basically this D legs, let's say default retracement, Fibonacci retracement. If you want to use this animal, let's say, from the harmonics, right, you can arrive at a point where you have everything you need for that, right? So we have the harmonics backing this view up. We have the Fibonacci retracement 78.6. 61.8 did not. Basically it broke through it, right? So it decided to extend the basically to continue the bullish moves, but in an ending diagonal. So this could actually breach right here and just go. That's the confirmation, let's say. So if you guys see this and then obviously you see the correction, then that's definitely, in my personal opinion, more downside to come. So the confirmation, possible basic confirmation for the downside, right? So for the dollar Swiss, I'm still expecting more downside as soon as this pattern is finished. Okay. So next is going to be the USD CAD. So let's jump on the dollar CAD right here. We do have news for the CAD today, okay? But there's something different here. It's not that I'm seeing the dollar strong. I'm seeing it taking advantage of the CAD's weakness, and this is all basically because of the BOC, but also because of the WTI crude oil. And we'll take a look at that later on, where we actually go on the metals and energy charts. Okay. So I'm seeing basically a weakness in the WTI, in the CAD, temporary weakness, which could actually result in this continuation for the C leg, okay? Because the way I'm labeling the USD CAD is in a 1, 2, and then this is basically another 1, but the Fibonacci retracements for this wave 2 of the extension is not complete yet. So I would actually be looking for more upside, let's say, before this leg, this corrective move is finished, so we can actually continue the views on the downside. All right, so patience with the USD CAD. That's basically what I'm trying to say. Now the Aussie dollar, okay, did indeed give this expanding flat as well for this minor degree orange B right here. So the way this moves is in an A, leading diagonal, expanding flat, correction in the B wave. Okay, so we have the 61.8 golden ratio being touched right now. We do have a bullish divergence right here on the corner. If you ask me, this is basically the support, and also, you know, some would actually see this as an inverted head and shoulders as well, basically to pave the way for more upside. So I'm bullish. Okay, as you can actually see from this order, I'm bullish as well. And by the way, after I'm done with this video, if I'm going to be posting some free views on TradingView, let's say, some trading ideas. But if you want to get the real stuff, I'm going to update on the website some fresh intraday orders according to the market's current conditions. Okay, so if you want that, go on the website lionheartewa.com and get your dose. Right, so let's say the NZDUSD. The way I'm labeling this is in a WX, right? So then leading diagonal in A, and then basically the corrective structure in an ABC for a zigzag. Okay, so we have the A, 5-wave sequence in A, 3-wave sequence in B, and then the C leg, the powerful C leg, 1, 2, 3, 4, and then the 5th leg. I believe it's finished because it touched the 61.8, 200% basically of A and B right here. Okay, and I believe that it could be ready to go. And if this actually starts, then this move was actually nothing, because I would be expecting a solid move from the New Zealand. Okay, so that's about it for the FX majors. Next, we're gonna go on metals and energy. All right, so metals and energy, gold, silver, crude oil. Okay, WTI, West Texas Intermediate. So let's just kick things off here with gold on the 2-hour time frame. Okay, now from the previous videos, you guys know that I was actually expecting a complex structure right here. This still has chances of being a triangle. Okay, But the way I'm labeling it right now is in a WX and then a Y. Okay, so A, B, and I'm labeling the C wave in an ending diagonal. So 1, 2, 3, 4, 5, something like that. Okay, I wouldn't be surprised if this evolves into a small triangle right here. So basically, because um, even though we do have the trend line, right? Remember, this is a wave 4, and a wave 4 would typically break the trend line just a little bit, just enough to trick people into thinking that this is a breakout, right? I mean a breach. So I don't think so. I think that gold has more upside, okay, as I've been previously saying, okay, and when I did, we did have this rise, okay, so it wasn't complete right there. So the structure is actually completing right now. We do have 100% from this swing and the interruption. We do have 100% right there. As you can actually see, I'm eyeballing it. Okay. And we also have some important Fibonacci retracements. Okay, so the 38.2 default measurement. Now, if this decides, and let's say for instance, if I'm slightly off, okay, let's say for instance, this is actually wave 3, 4, and then 5, which means that this minor degree green 3 is not actually a minor degree, and it's actually the intermediate degree right here, and the wave 4 is actually this one, but still there is at least one more leg on the upside before the big fall and the big sell-off in gold that some are like screaming about, and I don't think it's ready yet, y'all. Okay, I think that gold and silver will massively surprise on the upside and catch those guys who are looking to desperately sell it, catch them with their pants down. You know, it's slight. I mean, take a look at this. Take a look at this structure. Okay, I don't think. At the way it looks as of now, I could be wrong, okay, but I could be right as well. I do not think it's actually ready to breach right here and retest this zone. Okay, not yet. Okay, there's not enough evidence for that just now. So my 2 cents on gold, I think, could be preparing to give this bullish divergence right here for this ending diagonal. So this is basically the unicorn at the end of the rainbow, ending diagonal with a bullish divergence at the completion of the pattern with the fibs. Bro, I think this is a good setup. I think this is gonna go on the upside. Okay, we'll keep on monitoring it. Okay, if you guys have any questions, just shoot them there. Comment in the description right here. Throw your comments in. Okay, if you like this video, please support it with a thumbs up. If you don't like it, then shoot me your insults right there. I can take it, no problem. Don't worry, guys. Okay. So let's just continue with the silver. Okay, so for gold, it's quite clear for me. I'm expecting more upside, and the move on the upside could be quite sustained, impressive. Moving towards silver. Remember, from my previous video, I've been explaining the fact that I might just change the wave count, right? So I did. I'm not labeling it as, labeling this as a triangle, okay? Instead, I'm labeling it as a double free. So A, B right here, double free in this B wave, okay? And then the C wave. So this makes an intermediate degree A wave, which is the green A right here in brackets, and followed by a complex correction. Okay, this could pass as a WXY as well. Okay, but but if that's so, then it already reached the bottom. It's the way it's evolving right now that I'm not really comfortable with. If this is indeed the start of this move, it should start now. If it isn't, then one more leg is due to come, the bullish divergence to be complete, and then basically silver to react from this A, B, Okay, we do have the 161.8 extensions, Fibonacci extensions, which is basically lining up from with the previous vibration zone where it decided to shoot and jump and surprise. So that's exactly what I'm gonna expect right there as well. Okay, now moving on towards the energy sector. Let me just jump right here on crude oil because in my previous video on WTI, by the way, this is a 4-hour chart. So in my previous video, I was actually expecting, basically explaining and expecting the breach on the downside on the OPEC meetings and so, right? So we did have the breach. We did have the bearish leg. Now the way this is going on the upside, the way I'm actually seeing it is in um, is in a correction wave. Okay, so let's say if we label this as an A, B, and then ending diagonal 1, 2, 3, 4, 5. Well, this could actually, let's say for instance, tag the 78.6. Now, if you would be using your animals, let's say, then this could pass as a harmonic, let's say, with at least 78.6 right here for the fall. So more downside to come, but I'm expecting something big, okay, because the way I'm labeling WTI is in an A, B, C, so this makes a W, okay, and then this makes an X, and then A, B, C, which means that this leg on the downside should exceed the previous bottoms, and it could be quite sustained, extensive, etc. The reason why I'm saying that is because I do believe that there's another big wave, a tsunami of volatility coming, and that's due to the VIX, where it's located right now, the current location of the VIX, the volatility index. We're going to go on that, and we're also going to take a look at some indices. Okay, so let's just jump on indices. So moving towards the indices, we'll take the European indices first. I'm on the CAC 40, France 40, basically on the 4-hour time frame, and all indices I am actually labeling them. Um, some would say that this is actually starting. I mean, very bullish, and we're basically starting the free or freeze. Okay, well, I don't really believe that. Okay, it's not really decided yet for that to actually occur. I still believe that there's one more leg on the downside before the actual rise. I'm gonna go on multiple charts, and you're basically gonna see why. Okay, now the reason why I'm saying that is because I am not satisfied with this being the entire B wave, or basically labeling some sort of triangle right here, because a triangle does not happen in a wave 2. Okay, so if a wave 2, I mean, if this intermediate degree would be placed here, a triangle does not belong in a structure for a wave 2. Okay, either a flat or a zigzag or something like that, but not a triangle. So the way I think this structure looks is basically an A, and then this B wave is basically doing an overshoot, retesting the high, creating new all-time highs right here. Okay, so basically the way I'm seeing it is in an A, B, and then the C leg, and I think it topped out. Okay, if it did not top out, then we'll see if the next move, if it didn't top out, although the way you see on from these arrows, I'm actually expecting this to be the second wave and pave the way for more downside. So the way I'm labeling this, obviously this could be an ending diagonal as well. Okay, we'll keep that in mind, but so far this level has held nicely. Okay, it's how the move on the upside would look that we'll see more details, but there is a bearish divergence, prolonged bearish divergence at the new all-time high creation. So the way I'm structuring this is for a bearish outcome in a C leg, impulsive bearish move coming up. My 2 cents for the CAC. Now moving towards DAX, GRX 30, same thing. If this would be a running flat, okay, it should be stopping right about there. So the move on the downside might just hit the 100% and then just commence on the upside for this. So this wave 2 might be limited right here, but I do believe that it could be an expanding flat, and if that's the case, then it should drop very hard. Okay, this is due to the VIX that I'm seeing. We're gonna go on VIX, and I will go also on something that I do believe that it's worth taking a look at. It's a stock. Okay, it's Deutsche Bank, and I've been previously calling this drops on Deutsche Bank, and I'm gonna basically save it for last as the Easter egg. So the DAX 30, okay, the same thing. So I'm labeling it as a WX and then A, B in a running flat, and then the C leg. Okay, so we do have the bearish divergence right there at the top at the end of the C leg, fifth leg of C. So the way this reversed does look impulsive, 5-wave sequence. I'm getting the sense that it actually broke the trend line, so it breached it, and this should be a wave 2 followed by more downside. Okay, so in a nutshell, DAX 30, Germany 30, bearish verdict. Now taking a look at the UKX FTSE 100, let's say on the daily time frame. So let's take a look at the bigger picture. The way I'm seeing this is in a B wave. Okay, so more downside. I do believe that we're gonna have more downside to come. So the structure could be A, B, C right here in an expanding flat or running flat, but I do think it's gonna be an expanding flat. Okay, and then obviously the bull market to return, continuation pattern, deliver this last fifth leg of the bull market, and then there we go. The market crash is imminent, right? That's the recipe. If you want to see that article, just check the website out, okay? On the trading focus, I believe section, it's actually right there, the structures and the market crash roadmap, which I've made. Now, US 30, okay, Dow Jones, same thing, okay, so we have an A, then we have an A, B, and then the ending diagonal. So follow me right here. I'm labeling it as an A, B, C. So 1, 2, 3, this is 4. If we're gonna have the fifth leg, but if it breaches the trend line right here, the lower trend line of the ending diagonal, then it's quite bearish, and we could be ready to go for the C leg on the downside. Okay, so that's basically what we have. We do have bearish divergence right about there. It could go one more on the upside. Okay, so watch out, guys. Okay, I know I've posted these levels, they're holding nicely right there. Okay, but watch out for the last move. If we see support right here, granted, it should look like this. Okay, so a free wave sequence for the end of the for the fifth leg ending diagonal in the C. Okay, for the B. So for this, basically for this minor degree B wave. So yeah, now let's just jump on the S&P 500. S&P 500 SPX right here for our time frame. Same structure. We do have an A, then A, B, and then the C leg. So 1, 2, 3, 4. Yes, you guessed it. Ending diagonal in the C of B. Okay. So for the extensions, let's say from A to B. Okay, now it's a super massive C leg, I know, but so was this one, and then of course I've been able to let you guys know that the bear trend is actually starting for the Dow Jones, for the Nasdaq, for S&P, and so and so and so. Okay, so you guys can actually see how it actually dropped. Not only this one, but also Nasdaq. Nasdaq was a perfect entry. So this could go one more time on the upside. Okay, we do have the divergence right here, but maybe today on the FOMC, let's say on the Fed's, basically on Chair Powell's speech, this could result in that last move on the upside, tagging the top, under which case obviously I would be posting fresh entry levels, and these would be break even at one point or small defeat. Okay, but I'm satisfied with what I got so far. Okay, so we'll just leave it be. Now, moving towards the Nasdaq 100 right here, still on the 4-hour time frame. And as I've said, okay, as I said before, these these orders were posted, let's say way back in April. So I've been actually saying that we could have right here, okay, and notice this entry, marvelous entry right there, okay, the move on the downside, and it did actually drop. Now, if we were to just measure this just a little bit, okay, we would have about 900 pips right here on the downside, which means about 9K with one lot, right? Depends on how much it costs you to open one lot with your current broker. If you do need um, brokerage, let's say, then you can consult with me if you want. I could recommend one if you wish me to. So let's say similar structure, ABC, ending diagonal 1, 2, 3, 4, and then I would expect this to gain support, finalize this, and just go. Just in case it breaches here, this order is in the menu, but there will be fresh orders right about here. If it does the overshoot, then that's the level that you guys might want to take a look at. Okay, so let's see what could cause such a massive drop for the indices, right? Well, there are factors. I mean, check the markets. We do have trade war talks and so on and so on. We do have the Feds. We do have multiple things happening at the same time. But the VIX, right? Now the VIX rose when I said it could rise. Okay, now remember, this is coming from here, from here, from here, okay, and all the way, right, even there, even there, okay. And I've been posting. Now the way I'm seeing this current pattern is in a B wave, but a complex one. So W, and this is the X wave. So A, running contracting triangle, B, and then this should be the last C leg. If it's finished or not, that I don't really know yet, okay? But I do know that the move on the upside is coming, and that could actually hurt the indices, okay? So keep an eye out for a tsunami of volatility coming up very soon, okay? Now, the Easter egg is DBK, Deutsche Bank, as I previously mentioned. And this has been dropping, and I've been posting. By the way, check out my TradingView profile if you want, okay, or go on the website. You guys can actually see right here some views, but there were others posted as well while it evolves more on right there. Even on the monthly chart, check out the profile, okay? So allow me to explain to you how I've been able to predict this drop, okay? Because let's say 2 days ago on Sunday, they announced that, you know, they will fire people, bank is not doing good, and remember, this is a bank who's been having major difficulties. A few years back, I mean, let's say for instance, before the 2008 recession, the price per share was about 90 euros. Now we're looking at 6.66. Okay, not the best number, but you know, you guys see what I mean, right? So how I've been able to catch that? Well, this pattern is actually different, but it's a fractal. Okay, so it has been. I mean, I cloned it and placed it here just for me to have an idea on what it could do. And the structure was an A B, and then 1, 2, 3, 4, 5. Okay, so it topped out at the 78.6 right here, and then boom, 5-wave sequence. This is wave 1. I would expect either wave 1 or, remember, if this is an ending diagonal, the way I'm labeling it right about here, then this A, B, C is actually the first wave. Okay, so 1, 2, 3, 4, 5. Okay, so in this fifth leg, basically intermediate degree brackets right here red to unfold in a landing diagonal in which all waves have 3 wave sequences. So A, B, C, 1, then 2, then A, B, C, 3, correction 4, whatever pattern this decides to be, and then another A, B, C, and we should have something going on the upside after that in a correction wave 4, but it could go as high as 15 euros from 5, so it could triple basically, and then top out for the market crash sequence. Okay, because I am seeing this, and this is my personal opinion, but I do see Deutsche Bank as being the next Lehman Brothers, and this could be the catalyst, the trigger for an economic collapse in Europe. Okay, so I do see something coming, and my personal opinions is that United States is not really the trigger. I believe Europe is the trigger right now, but a chain reaction to happen globally, because even Asian indices are pointing towards that. If you do want to see some charts, go on the website and actually see them. I know this video took a long time. Thanks a lot for watching. Please support it with a thumbs up, share it with your friends. Anyhow, thanks a lot. Until next time, as I like to say to all my traders, stay in the green and many pips ahead. Bye for now, y'all.